welcome to, I think, the final panel of today. My name is Henry Lovendahl. I'm CEO of WavTech, which is a specialist foreign direct investment consulting data and technology company. I think it's very fitting that the final panel is going to be looking just at the overall reason everybody is at AIM, which is foreign direct investment, trying to understand more about what's happening in the foreign direct investment.
The mic, because otherwise.
Oh, sorry?
Spike in the mic, because otherwise I cannot listen.
Oh, okay. So,
yeah,
a bit closer.
Yeah,
sorry. Apologies. So I think it's very fitting that the final session is focused on the broad topic of foreign direct investment. What's happening in the market, and what does the future look like in terms of foreign direct investment? I think because we started a little bit late, the panel will try and keep it to around 50 minutes. And if possible, at the end, we'll ask the audience if you have any questions for any of our panelists. So, as we're going through, if you think of any questions, hopefully you have a chance at the end, if we have time, to ask the questions. So I'm just going to go ask, first of all, for each of the panelists, if they wouldn't mind just quickly introducing themselves. And which organization you're representing. Maybe if it's possible to start. Thank you.
Sorry, myself. Okay, hi everybody. I'm Andrea Goldstein. I'm a senior economist at the OECD Investment Division in Paris.
I'm Hiroshi Hirakawa. I'm a chief economist, Credit Suisse, Japan. Thank you.
Good afternoon, Mr. François Guibert. I am the CEO of EDB Mauritius.
Good afternoon all. My name is Yewande Sadiku. I'm the Executive Secretary and CEO of Nigerian Investment Promotion Commission.
Good evening, everybody. I'm Elena Verevchkina. I am a Russian banker. I come from St. Petersburg. I work for a bank for 8 years.
Thank you everyone for the concise introductions, which will give us more time for discussion. So you can see we have a really mixed panel of senior economists from banking, from OECD, and then senior government representatives as well. So I think we're going to have a really interesting discussion. Maybe just jumping straight into it. Andrea, if it's okay, maybe start with some insights from you. So if you look at the global FDI market, just in terms of the FDI flows, according to UNCTAD and other sources, the FDI flows have been declining actually worldwide every year since 2015, most of all to developed economies. Just in terms of your views and insights, I mean, what do you think is behind the reasons why overall FDI flows are declining? Is there any differences between different regions of the world? And in particular, maybe thinking about developing countries, as there's quite a lot of emerging markets in the room. And finally, if you have any views on this, if you look at the global FDI market, FDI is a very broad definition, with maybe two of the main components being mergers and acquisitions, when a company acquires another company in another country, and then maybe the greenfield investments in new kind of subsidiaries and operations. So if you had any views in terms of the relative importance and trends and the types of FDI, I think that would be really interesting for everybody. Thank you.
Absolutely. Thanks a lot for the question, and I hope you don't expect me to respond to all of these questions in 3 minutes, because that's going to be almost impossible. But thanks. I guess the main point, obviously, is that we are witnessing a slowdown in FDI flows, regardless of the measure you take. This is true for balance of payment data, which the OECD itself is going to release in a few days, our first estimate for 2019, covering the G20 countries, the OECD countries obviously, but also the G20 countries and some other large emerging economies. It's also true in terms of the merger and acquisition market. Now, there I think that there are different ways of looking at cross-border M&A, because in many cases, especially in the larger developed countries, deals that appear prima facie to be domestic are in fact have a very strong cross-border dimension. If a large American company buys another large American company, that appears to be prima facie a domestic deal, but no likelihood both the acquirer and the target have huge international operations. So you tend to underestimate the true level of cross-border investment. So I guess there one has to be cautious. Some numbers released recently by FDI Intelligence, also in the case of greenfield investment, point to a slowdown. Now, the second question is whether this slowdown is just a short-term movement or something much more structural. So whether it's a proof of the so-called globalization that the Economists put on the cover page a few issues ago, a few weeks ago. Now, I think there is an element which is structural and has to do with global value chains and trade more generally. There is a feeling, I guess, which seems to be proven by and vindicated by data, that we have reached a plateau in terms of the trade intensity of global economic activity. There is a limit to how much you can, to the number of stages, steps in the value chain that you can dissect and create, and therefore in the opportunities for trading that you create. So there is probably an element there, and to the extent that, as we know, a lot of trade and a lot of global value chain trade is linked to intra-firm trade and therefore to international investment, there is a limit to international investment. The other elements which are probably more short-term, or hopefully more short-term, one is political uncertainty and protectionism. I think that the benefits of a well-developed and well-managed globalization, so it's not a free-for-all, but it's a well-managed globalization, those benefits have been proven all over and over again by many institutions, and I can think of ECLAC in Latin America, but I can think obviously of the OECD also at the global level. So I think that sooner or later this, which appears to be a long-term trend of protectionism, will actually phase out, and we will resume with liberalization, but obviously an intelligent liberalization. So this may be for the first round. I want to, because you asked me a very difficult and deep questions about that, I want the others also obviously to have an opportunity.
Thank you. I mean, maybe just one quick follow-up question. So as far as I'm aware, the OECD is also tracking like the activities of multinational enterprises as well as FDI. And I mean, the way I look at FDI is maybe a bit different from trade. So like if exports go down, it's an absolute decline. But if FDI flows go down, maybe the stock is still increasing because so I mean, when like governments or companies see the overall FDI going down, I mean, are multinationals becoming less important, or are they still becoming more important to be focusing on?
Well, you seem to know a lot about the OECD, and which is good, great, and I'm very proud of that. But now, seriously, the activity data of multinational enterprises is an endeavor that the OECD, together with other international organizations and obviously national statistical offices, has engaged in already a few years ago. Unfortunately, the data are not so up to date as they are for balance of payment and other statistics on international investment. They suggest that, again, in terms of employment, turnover, export, maybe less so in terms of R&D activities, the international activities of multinational enterprises have reached kind of a plateau. There is an element there of digitalization, going back to the subject of many of the sessions at this great conference, and that has to do with the fact that the GAFA and other large multinationals of the new economy, they are very thin in terms of asset intensity, in terms of employment. So even if they account for an increasing share of the global GDP and global economic activity, this is not necessarily reflected in activity data of multinationals. There is another element which makes the picture much more complex, I guess, than probably 10 or 20 years ago, which is that a lot, as we know, of international activities and a lot of international investment now is carried out by southern multinationals, emerging multinationals. And for this, obviously, the data are not as good as they are for OECD countries or some other economies. Brazil has good activity data. India has pretty poor. China has data that seem to be so precise that you question whether they can have such precise numbers. So that makes it much more difficult to understand what is happening. But a lot is happening, that's for sure.
Thank you very much. Hiro-san, if it's okay if I ask you the next question. And I think it was mentioned by Andrea as well in terms of, you mentioned protectionism. I mean, in terms of policies and impact on FDI, it'd be really interesting from your perspective to think about, what kind of policies around the world are having the biggest impact on the foreign direct investment flows and decisions of companies. And I mean, there's lots of things happening in the world these days. You have the One Belt, One Road from China. Is that actually having an impact on FDI? US, dramatically lowered its corporate tax rate, I think from 35% to 21% or something like that. And that's had I guess, quite a big impact on perhaps on US FDI. US government also quite restrictive of Chinese mergers and acquisitions in the US and Chinese FDI generally around the world. Japan, I understand recently, is trying to promote more FDI into Africa. And then, of course, the country I'm from, in UK, you have Brexit. And the impact that might be having on Japanese investors and investors from other countries. So there's so much happening. How do we analyze this, understand it, and how are all these big policy shifts impacting FDI? So sorry for the challenging question.
Well, I think two fundamental backgrounds for the public sector or governments. Well, not an intervention, but I think the incentive to impact FDI. One is, of course, there is a FDI economic growth virtuous cycle. So, we have been seeing a situation where FDI, I think, promotes economic growth, and economic growth promotes reinvestment and so forth. So there is a decent reason for the government, in particular industrial nations government, to take a kind of initiative on FDI to make their own countries, companies benefit from FDI and economic general. And second, maybe national security issue. This is a bigger issue, and the Japanese government has been running from Chinese authorities' stance on investment. This is mainly because, as you mentioned, One Belt, One Road initiative is a huge one. And now the discussion inside Japan is that whether or not Japan is following China. The one issue is, does it make sense in terms of the economic growth maybe and national security? But in the meantime, economic viability is another issue. So I think I don't say public sector's decision is not so efficient, but in the meantime, there will be the issue of the efficient allocation of money and possibly overinvestment. That issue would come up. And finally, some economic instability could be the case for countries where they got investment. So Japanese authorities are now looking carefully the cases where invested countries, whether or not really benefiting from FDI. So this is a very general issue. And for your point of the Japan's stance change, for example, a more proactive stance on Africa, I think this is again relating to large extent, in my understanding, security issues. Japan has been lagging in terms of the foreign direct investment initiative by the government, and we are lagging in terms of region in Africa and Central Eastern Europe, and maybe other emerging economies. Japanese FDI has been so far in terms of the outstanding one-third Asia, one-third North America, one-third Europe. So other than Asia, Japanese money hasn't gone much into emerging economies. So we are changing now the strategy, and maybe we're going to see some interesting thing happening outside Asia in terms of emerging economy. And I would like to stress that Japan is running every year, roughly speaking, $200 billion of external surplus. And this is a big money. And out of that $200 billion, $150 billion is a recycle through direct investment. Japanese money is no longer that interested in portfolio investment. This is mainly because of the declined interest rates globally. And we know that FDI makes more money to Japan, so we tend to think that from here on, Japanese FDI money continue to grow and more regional diversification will happen. So we were very much focusing on Africa in that sense. Brexit story, we don't know, but I think the Japanese companies are now shifting their focus, or shifting a destination of investment from UK somewhat to maybe South Europe, in particular Spain. So we are seeing such a change going forward, yeah.
Thank you very much indeed for sharing those insights. So, I mean, from what you said, I mean, I know from the data, Japan, depending on year by year, is either the second biggest or the third biggest source of foreign direct investment in the world, and you're talking about a figure of around $150 billion or so of direct investment each year. So it's, I mean, a huge opportunity, I guess, for countries to attract Japanese investment, maybe, as you say, especially...
Yeah, I think I, as a Japanese, admit our weakness, which is we're not that well-positioned in terms of the getting used to the new culture, new corporate governance, new regions, and that's why we have been doing more reinvestment in US and Europe, industrial nations in particular. So if the developed nations support Japan, I think Japanese money more going into new developed world, I think. So it's sort of, the strange ask from the industrial nation, but, Japan will need such a kind of support from the regions which need money from Japan, yeah.
I mean, just finally, I mean, are Japanese companies maybe more risk averse than Chinese companies or companies from other regions?
I would say definitely yes. The problem we have is we had a very big economic downturn back in late 1990s, and many people lost money domestically, even outside the country. And our problem is the currency is not necessarily weakening. I mean, as a trend, maybe strengthening, so forth. So risk averse, and plus the mentality-wise, significant difference from Chinese. So we need to change, but taking time. But I think again, support from you or other countries would be very important.
Okay, I mean, maybe just one final thing. I mean, in terms of maybe there's a lot of government organizations in the room now and on the panel as well. What would your advice be in terms of if you're going to go and approach a Japanese company to try and encourage them to invest in your country or regional city? I mean, what do you think is going to allow them to get over their maybe natural risk averseness?
No, I think somebody has to be taking a role or bridge between the nations which seek Japanese money and Japanese money itself. So maybe, like us, like investment bank, but I think, you can approach the Japanese government. But I think my point is that private money is now awaiting those approaches. So I'm not saying our company only, but I think some interesting scheme could be established.
Thank you. It sounds like it's a good time to go to Japan and meet some investors.
Please.
Thank you very much. Francois, I mean, looking at Africa now, so we talked about Japan, the global trends. If you look at Africa, according to data, I think preliminary data from 2018, it was the fastest growing region for FDI in the world. Still quite a very low level relative to other regions of the world. So it'd be interesting just to get your maybe Africa-wide perspective just in terms of the trends, opportunities for FDI. And maybe I just point out, just for everyone's benefit, I mean, there was a recent extremely high-profile case from Africa. So Naspers, which is a South African company, they just announced their listing in Amsterdam with a $140 billion estimated listing, which will become now the largest internet company in Europe, and that's an African based company. So, I mean, it shows, in my view, what some of the huge things happening in Africa, and how important African companies can become. But Mauritius where you're from is a relatively small country. I mean, how also just in terms of a smaller country like Mauritius, especially when you're maybe competing or looking for investment in comparison to big countries like Nigeria, which we'll talk about, and Egypt, Ethiopia, these huge growing economies. How do you attract investment? I mean, how can you make a small country stand out, within this context? Thank you.
Sure. I will try to answer your three questions. First of all, the investment in Africa indeed grew 6% in 2018, but after, of course, a decline of 21% in 2017. But the world FDI declined also 23% versus 2016. So the good news is that normally, according to the United Nations, it should increase by 20% this year in 2019. So we will go back, let's say, to a very strong number. Second point is Africa is a fantastic opportunity. It is like what was ASEAN, for example, 20 years ago. There is plenty of parameters that makes Africa very attractive. The fact that it is holding 30% of the, let's say, resources. There is 60% of the untouched arable landscape which is available. The population is very young, 50%, and there is a dynamic of some countries in Africa which are extremely strong. Some of the countries may do between 5 and 8% GDP growth. So the International Financial Center of Mauritius has a very strong place. We have done 36.4 billion cumulatively of investment, which has been going through Mauritius to Africa. And almost every year, there is $2 billion going through the International Financial Center of Mauritius. Indeed, coming back to your second question, there is the opportunity of African companies. There is 110 companies significant, which are listed on the Stock Exchange of London, representing a market cap of 197 billion. And we believe that this is a very strong strength for Africa, started to be visible on the stock market. I would like to mention that indeed a few of them has been in 2018 able to leverage on such a stock market through IPO and multiple stock even exchange. Some companies in South Africa has been raising 35 million. There is two in Mauritius, like Great Real Estate and Afrexim, who has been raising more than $100 million from the stock exchange. So there is a dynamic of companies that are really able to leverage on stock market to be sure that they can enter in both equity and debt market. To answer your third question, it's even a little bit easier. The size doesn't matter too much. When you see that, Singapore in ASEAN, which is one of the smallest countries, has been so powerful and successful versus countries, which was having 100 million or 250 million inhabitants. I think that the population is not the issue. In fact, it's to be sure that you have the right ambition to become the kind of regional headquarter. And we believe that we have a set of ingredients that make us very special. There is an IP protection, there is a rule of law and political stability, there is a very good educated manpower, there is a high level of security, both for people, for companies, and for data. There is an ease of doing business ranking by the World Bank, where we are ranked number 20. So I can claim that we are in the G20 of the ease of doing business. There is, of course, a very low tax rate of 15%, and in many areas it can be down, let's say, to 3%. We have an arbitration court, we have stock exchange, and we have a standard of living that I am sure that I don't have to sell in Dubai today. So we believe that these ingredients are making us rather specific and special, and therefore medium-sized and big companies from Europe, India, China, Japan, Australia may have good reason to start to operate from Mauritius, of course, they will put manufacturing and sales in the region itself. But, you know, all the ancillary position of accounting, legal, IP protection, communication, HR, training, logistic, and so on, can be safely and smartly set up in Mauritius, and not, you know, being obliged to feel that you have to replicate it 55 times in the African countries. Therefore, we believe that whatever as a competence center or as a regional headquarter, we have the key position. We are 4 hours from Africa. We are part of the Union Africaine since its foundation in 1963. And we believe that we are also very close to Asia. So we have the place for FDI, and our international financial sector already reflects that.
Thank you. That's really interesting. A good sales pitch. Where do we sign? So no, it's really good. In terms of Africa, so you mentioned the African Union. I mean, there's a lot of regional integration happening, Pan-Africa, different regions of Africa. I mean, is it becoming more like is it going to become like ASEAN or the EU? I mean, and how does that make it, is that an advantage for a small country like Mauritius?
Sure. In Union Africaine, you know that there was some agreement that was signed recently on trying to really have a commercial and an economic, let's say, Union Africaine, and I believe that this is a fantastic step. In fact, from Mauritius, we have developed also with some of the countries some special economic zone in Ghana, in Senegal, in Ivory Coast, we opt very soon to Kenya to be sure that we can operate some special economic zone for our investors. So they come to Mauritius and they want to develop in Africa. We have joint venture between these governments to be sure that you know, they have a secure zone of playing field to be sure that they can operate for sales, marketing, and manufacturing safely in the different countries. So this is government-to-government agreements, and we believe that we have also a strong position.
Well, that's really interesting. Thank you so much. Maybe moving to, I guess, the other scale of countries in Africa, looking at Nigeria.
Sure.
You're CEO of Nigerian Investment Promotion Commission, so have a big job to bring investment to one of the world's, Africa's, and indeed the world's rising economic powers. You know, the forecasts show Nigeria in the next 30 years will become one of the world's biggest economies. I mean, how do you see the opportunities and challenges of attracting FDI to a large, growing, emerging market, like Nigeria? If you look at China, Japan, Europe, the US, what are you doing to try and attract investors from those countries into Nigeria? And just finally, Nigeria is a big country, and there's a lot of other big emerging markets around the world. So maybe there's some interesting lessons. But if you look at the regions in Nigeria, how are you working with them, or supporting them, or coordinating with them to kind of, I guess, spread the FDI across Nigeria to kind of create economic development across the country?
Thank you. This is one of those instances where size is obviously a blessing, but like many blessings, sometimes it comes in reality with challenges. And I find the general measures of FDI are based only on the value of capital that flows into a country. So for me, one of the challenges is looking at Nigeria, looking at Africa, looking at FDI flows purely from the perspective of the value of FDI. The value of FDI is obviously important, but for the reality of the challenges of Africa, one is infrastructure, the other one is the age of the people, okay? 91% of Nigerians, for instance, are under the age of 50. Our economically active population from the ages of 15 to 64 is massive in itself. So we need jobs, and we need highly skilled, highly paying, highly specialized jobs, but we also need lower skilled jobs for young people who are not as well educated. So if we look at FDI purely from the perspective of value, we don't capture what is required in the country. And there's an IBM plant location index that looks at FDI not from a values perspective. It looks only at the number of jobs created. So it'll be useful to look at it from the perspective of the number of jobs created rather than just the value, because that deals a problem. It is also true, I mean, clearly the value proposition across Africa is different for small countries and for big countries. And I find that in order to ensure that we're attracting the right kind of FDI, and the right kind is in many ways. So it needs to be sustainable, it needs to be environmentally friendly, it needs to be inclusive because of the large number of people that we have, and it needs to help move us towards our sustainable development goals. I believe, given the proposition of Africa, whether we sell Africa or not, investors will come. But if you want the right kind of investors, clearly you have to go after them. So the things that governments need to do, including improving the business environment, become important. But it's also important to target specific countries for specific value propositions that they represent. So the UAE, for instance, is a big global investor in real estate. So I would pitch real estate to UAE when I would pitch something else to a Japanese investor, and I would pitch something else to an American investor, and I'll pitch something else to a Canadian investor. So dealing that sort of insight is also valuable. So we are moving in Nigeria from investment promotion that was largely reactive to more proactive, country-focused, sector-focused, and company-focused investment promotion. So it is targeted in trying to help us achieve our objective. Nigeria is a large country, as we've identified. And Nigeria is so large that many of the 36 states in Nigeria and the Federal Capital Territory are by themselves, by size or by population, could be several countries in Africa by themselves. So when you talk about ease of doing business, for instance, the common denominator that many use is Rwanda. Rwanda has a population of 13.5 million people. And if I look at the size of Rwanda, there's 16 states in Nigeria that are bigger in size than Rwanda. So the challenges they face are different. And in our engagement with investors, we think it is just as important to help investors understand the difference between the states in Nigeria, not just look at Nigeria as one picture. So it's not an apple is an apple is an apple. They're all fruits, but an apple is different from a grape, is different from an orange. And the value propositions that each one represents are different. So in terms of sharpening our own saw, the focus is not just on identifying the countries that are important for Nigeria as a country, given the challenges that we're trying to deal, for strategic investment promotion, but also to help investors understand the difference between the states in Nigeria and the value that each one represents. But the size of Nigeria today, the expected growth in the population of Nigeria, the can-do spirit that Nigerians have, and the fact that in the fourth industrial revolution, it'll be more about entrepreneurial energy and how you use innovation to deal with challenges. I mean, I think that Nigeria, I actually say to many people that in future, managers will be queried or fired for not investing in Nigeria at a time such as this, because you don't wait for the value to be fully realized. You invest because of the potential that it represents.
No, I mean, no, thank you very much for sharing the insights. And I think your comments about it's not about just kind of the value of FDI, it's the kind of quality of FDI and getting the desired impacts from that investment, which is important. I think you kind of said that a lot of FDI will come anyway to Nigeria, and then your role is to find the investors which will have the right impacts for the right regions in Nigeria, which I think is a really good kind of best practice for everyone trying to attract investment. Just finally, in terms of where you see the best opportunities, if you had to kind of pick a few countries which you think have the best opportunities to invest in Nigeria, or a few industries which you're trying to develop, I mean, can you give us maybe share a little bit about your strategy in terms of attracting investment?
Okay, I won't share the full picture because I'll be giving too much away. But we identified 20 countries as important for strategic investment promotion. And we identified those 20 countries on the basis of their global, their African, and their Nigerian trade and investment relationships, on the basis of Nigeria's, the priority sectors that Nigeria identified that we're trying to, in particular, move the needle on, and we consider the countries as well with which Nigeria has strategic relationships. So there are 20 countries, and the UAE is one of them. South Africa is one of them. South Korea, UK, US, China, India, but all of them for different reasons. Canada is a strategically important country for investment promotion. Japan, Singapore, Malaysia, but 20 countries for a variety of reasons. In terms of the sectors that we consider most important, obviously we have material shortages in infrastructure, and many see those shortages as challenges. The reality, though, is that those shortages represent investment opportunities, and it's everything from power to transport. Agriculture is the biggest part of Nigeria's GDP, but a lot of what we produce actually suffers from post-harvest losses, which means we're not preserving, we're not adding more value. So that's an important part for us. And to go from subsistence farming, which is also of the agriculture that we did historically, to using more technology, but also preserving, processing, and converting into other forms. Because of the size of the population, construction and real estate is important. Because of the wealth of mineral resources, mining and beneficiation are important. Because of the size of oil and gas, using a lot more of that gas to generate electricity. Because of the size of our young population and because of the entrepreneurial energy, development of the digital economy and harnessing that divide between technology and innovation, they're very important. I could go on and on.
Thank you, extremely useful. Thank you to understand the kind of industry opportunities. And then maybe sorry for having you last on the panel as well, but in terms of Russia and CIS, countries and region, be interesting just to get your views just in terms of what you see are maybe some of the foreign direct investment trends and opportunities in Russia and the wider region. I mean, if you look at Russia, it's historically been a big location for investment, a lot of companies investing there, and also Russian companies have been big investors overseas, especially in like energy, mining sectors, a few of the sectors you mentioned there, but also Russia's strong in some technology sectors as well. So it'd be interesting to see what you see as the opportunities to attract Russian companies as well to invest. Thank you.
Thank you very much for your question. First of all, I want to say that it is my privilege to be here today in so exciting city and among such a professional auditory and being on one stage with esteemed lady and gentlemen. Thank you very much for invitation. Actually, I can speak about Russian investment climate, about FDI for ages. And first of all, I would like to give you some figures, just fully realize the current situation in the country. After a period of moderate growth, Russia's economy slowed in 2013. Developments that took place in 2014 have greatly affected the Russian investment climate, with, of course, along with sentiments of foreign investors operating in the country. The biggest blow was dealt by the introduction of sanctions against Russia and a plunge in oil prices that actually significantly worsened the whole macroeconomic situation in the country. Talking about Russian investment climate now, I can say that Russia has undertaken economic reforms, and now we're witnessing positive developments in the business environment in the country. Russian GDP is close to recovering its position to pre-sanction level. the share of FDI in the GDP remains relatively low, and capital working investments represent a large share in overall FDI. According to the World Bank Group's Doing Business rating, Russia ranks in 31st place, having climbed up 98 position from 120th place 7 years ago. It illustrates that Russia is strongly committed to enhancing the business environment in the country. Talking about sectors, the key sectors of the national economy are mining, heavy industry, automotive industry, real estate. And here I would like to emphasize some high potential sectors to FDI in the country. First of all, it is transport and communications, agro-equipment. Russia needs to reconstitute local production tools to deal with import bans from the European Union. What else? Informational technology, pharmaceuticals and medical industry, aeronautics, distribution. Russia's main investing partners are Cyprus, Luxembourg, the Netherlands, the Bahamas, Bermudas, France, Germany and Ireland, EU nations with a large investment in the country, and of course the United Kingdom, which is also a large traditional Russian investor. In the case of the United Kingdom, I believe that British pragmatism appears to be winning out over politics, and in general the trade between Russia and the European Union is actually growth. We have two sectors have become more important. It is still the car sectors in terms of having more manufacturing on the Russian territory, and the food processing sector. But I would like to say about new trend, which is marked by China and Korea. Actually, Russia is a founding member of the Eurasian Economic Union, a vast free trade zone which essentially sits between China and the European Union with a GDP of $5 trillion. I believe it is worth to think about the trade potential that offers. Eurasian Economic Union trade grew by 38% last year, and Moscow have provided incentives for Russian companies, for Russian-based companies to grow and develop. So, basing a foreign-owned company in Russia essentially qualifies it to take advantage from Moscow-backed policies. Russian exports are expected to reach $250 billion by 2024. Aside of the Eurasian Economic Union, Russian trade with Asia is experiencing strong growth. Trade with China, for example, hit $100 billion last year, with that's set to double by 2022, yes. And Vietnam has a free trade contract with the Eurasian Economic Union, and Russian companies have been setting up production facilities in Indonesia and exploring investments in other Asian nations and India. Delhi has certainly provided establishing new trade zone, especially for Russian businesses. And actually, I would like to say that Russia is looking now at breaking into Asia and non-traditional emerging markets, and its companies are being incentivized to do it. And using Russia as a foreign investment base to break into the domestic market, it is a very good idea. But there is something else. The current sense of outward expansion from Russia overseas that is currently taking place. So I think that it is a huge additional potential of assisting foreign investments in Russia to break the markets of the Eurasian Economic Union as well as Asia. So, and once foreign investors can look beyond the media and political rhetoric, I think that the opportunities, desire, and incentives are there.
Thank you very much for the overview of the opportunities. And I think I took maybe 3 key things out of that. I mean, the improvement of the business climate, that was really impressive. And actually, I wasn't aware of that. So maybe that needs to be more promotion of the improved business climate. And as you say, even like with sanctions or import-export restrictions, that actually, because it's a large market, means it should encourage FDI to serve the local market. So I think that's, and with the improved business climate, that should make it more attractive. So that's very interesting. And I think the other thing you mentioned was the kind of free trade agreements, the bilateral government agreements, and how that's creating more regional opportunities for trade and investment, which is clearly very important. And finally, I think your comments about how Russian companies are maybe being encouraged more to look outward and to invest more in Asia.
Yes.
And around the world, I think that's also really, really interesting for everyone, because Russia, is a big economy, big companies, and so maybe we should have more focus on attracting Russian investment. So thank you. Maybe just before we wrap up, if there's any questions from the audience, if you please just raise your hand, and hopefully we can get a microphone to you. If there's any questions for any of the panelists? Anyone with any questions? No, maybe we covered everything. Yes? No? Okay, well then, if we just got a final few minutes, maybe if any of the panelists want to make any final comments in terms of maybe what the future of FDI looks like, or any comments from any of the other panelists, please do so.
Thanks a lot. I just wanted to make a few comments on the presentations by my colleagues and support some of the things they said, and make pitch on some of the things that we're doing at OECD, which I think could be relevant. The first point, I guess, which was raised by many, and especially by the 2 representatives from IPAs, is obviously that it's not only the amount of FDI that comes in, which is important, but it's the quality of the FDI comes in. And we are trying to measure this FDI qualities through a project which we will be launching in October for the first round of findings, but that hopefully could be of interest to IM in 2020 for the 10th edition. It could be a subject of interest, hopefully, and obviously I look forward to discussing with the organizers. A second project we have is the IPA network, and again, some of the IPAs represented here in investment promotion agencies may be already aware of this and be part of this. And the next meeting will be on the 22nd of October in Paris, so I will make sure that you also get invitations, and hopefully you can participate. In particular, Mauritius, not because I don't like Nigeria as much as I like Mauritius, but just because I was in Mauritius recently, and the OECD and the Financial Service Commission have launched a Regional Center of Excellence in mid-March, which is focused on the activities that François described and the role that the Financial Center of Mauritius plays, and obviously the challenges that are there, but also the great opportunities that can be better exploited. And the very last point, again, on what our colleague from the Credit Suisse Japan said about national security. Again, we just had the first conference on national security and international investment, which is an issue that is becoming very important, especially in G20 countries, but also in many other jurisdictions. And this was the first opportunity where in the international investment policymakers and people that deal with securities, spies and the like, were together in the same room and having a discussion, which obviously was couldn't be as open as on other topics. There is an element of confidentiality when you talk about national security, which is evidently even higher than in other contexts. But we look forward to developing in this area of investment policies and national security guidelines similar to those that we developed in 2008 on host country policies towards sovereign wealth funds, which is the companion of the Santiago Principles. So again, issues that could be of interest to this audience and the policymakers from not only OECD countries, but also large emerging economies and United Arab Emirates in particular. So, but thanks.
Thank you very much.
Sorry, could I make a comment?
Yes.
I'd like to just make a case for Africa. Africa represents 16% of the world's population, but only 2% of the world's GDP. It attracts 4% of global FDI. The reality is, both from a GDP perspective and an FDI perspective, Africa is what in investment banking you call underweight. There's massive underrepresentation. I believe that the economies of Africa will continue to, FDI attraction and the economies will continue to be cyclical while there's a huge dependence on commodities. But across Africa, there's a growing interest by governments in diversification. I also believe that the increasing wave of regional cooperation. Historically, Africa has been divided. I mean, it's not just 54 countries. It's divided in many ways. It's ACP, it's COMESA, it's ECOWAS. I believe that with the integration of Africa, under the African Continental Free Trade Area, that many investment-focused themes, the selling of Africa as a unit, I believe will be more aggressive going forward. I believe that regional cooperation is in the interest of Africa from big countries to small countries, because we will be selling a market across the board from north to south, from east to west, that is potent. The continent is also the youngest continent on the planet. That represents markets, that represents jobs, and that represents a hotbed of both innovation and technology. So I believe that Africa's relevance, it'll take some time while the base is being built, but the world better watch out, for what Africa is going to become.
Mm-hmm.
Thank you.
And I would like to say just a little bit. Actually, last week we have a great discussion with my colleagues about future FDI. And actually we can see the trend that global FDI fell last year, and the decline was concentrated in developed countries. And actually, in spite of the fact that developed countries remain very attractive for FDI, I can see that the world's economic center of gravity is shifting toward the emerging world. Actually, by 2030, Asia is projected to account for 65% of the global middle class and for 60% of middle class consumption. Asia is already home for more than half world's population. This is a huge market, and actually for me it is obvious why investors will fly there like moths to fire. But in general, I think that we live in a great time. And I think that almost every country which would like to fight for FDI is able to do it not just because of the huge population or having any resources, but just because of the developments in genetics, artificial intelligence, robotics, nanotechnology, 3D printing, biotechnology. I think that communication, collaboration, and connectivity are being transformed by technology and has enabled collaboration across organizational and geopolitical boundaries. And the question is how the governments and multinationals will use these developments. And you know, in Russian, there is a great expression, everything depends on people. And now I think that it is becoming more relevant than ever before. And in other words, I think that focusing on people, developing them, supporting their ideas is the recipe of success. And actually, on our discussion, we conclude that the FDI, global FDI, will follow the great idea wherever it is created and the beauty of its implementation.
Thank you. Okay. So I think that's going to end the panel today. So, I mean, thank you very much to all the panelists. Thank you for everybody for joining. Thank you.
Thank you.